The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, this is the Forex Fundamental Analysis for June 15th, brought to you by OctaFX. OctaFX has the lowest spreads in the industry and is an award-winning broker. Okay, let's begin. A few disclaimers before we begin. This is a risk disclaimer. Trading foreign exchange and margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer: the information in this webinar is provided as general market commentary and does not constitute investment advice. A few quick words about myself. I'm a Forex Analyst. My name is Johay Elam. I used to be a retail trader and a computer programmer. I founded the website Forex Crunch back in 2008, and I focus there and also in this webinar on fundamental analysis. On the agenda today, we'll cover the big stories moving markets. It's mostly from the Fed. The next events to look out for, and the next few days, the key levels of support and resistance using the OctaFX MT4 platform, and we'll do it for all major currencies. What we'll have is we'll start with the dollar and dollar yen, which moves most on the US dollar, then the euro with euro dollar, of course, the world's most popular pair, pound dollar, of course, lots of stuff going on over there. We'll move then to the Australian dollar, which is finally moving, and we'll finish up with the Canadian dollar, which also surprised this week with some nice movements. Okay, so these are the top stories for today. The Fed raises rates, and it sounds optimistic. So in the previous webinar on Tuesday, we were talking about the Fed probably going to raise rates because it told us so. That's what happened. The surprise is that it sounded a bit more optimistic, a bit more hawkish, okay? We'll dive into detail about that. On the other hand, against the US dollar, we have political news. We have news that the special counsel, Robert Mueller, is investigating Trump for an alleged obstruction of justice. Now, this can derail Trump's growth agenda, which is already not looking so good, but anyway, it's dollar negative. We had Jeff Sessions, former senator, the attorney general, testifying. He avoided the most sensitive topics. His testimony did not move markets, but this report about Mueller does. And basically, the big picture is US dollar is higher on the Fed, but politics hold it back. Okay. But before we had the Fed, yesterday we had a big drama, quite high volatility. We had the US inflation and retail sales data. The big headline here is that inflation, core inflation, badly disappointed with 1.7%. That sent the dollar moving down sharply, and also retail sales disappointed with only 0.3. Other figure was PPI was as expected. All in all, we had a crash of the US dollar, dollar yen, and other currencies, and then we had a recovery when we had the Fed. Okay, so in some currencies it's a real U-turn. The Fed, a bit more details, because this will affect the dollar moving forward for quite some time. They raise rates despite doubts about inflation. What they did tell us is only that they will monitor inflation developments more closely. Okay? But, on the other hand, there is no change to the rate hike path. One more rate hike is expected this year, either in September or December. And they also told us that, what we heard from Yellen, the most bullish thing for the US dollar is that the drop in inflation is due to one-off factors: prescription drugs, telephone bills, things that, well, to me sounded like excuses. In any case, the message is, don't worry about inflation, it's only a temporary drop. Inflation is looking good, the economy is looking good, and the US dollar made a U-turn recovery. Yellen also told us that the hike reflects confidence. Okay, so if we have confidence, we have a stronger dollar. And that they will begin reducing the balance sheet, but she described it as watching paint dry. Okay, that means very boring, very slowly. So this is a message for us, not to look too much into the reduction of the $4.5 trillion balance sheet, but to look only at interest rates, okay, because they will do it very, very, very slowly. So all in all, there's optimism from the Fed on global growth. That's, of course, a good thing. And what I did find interesting that surprised me in this press conference is that she said that stocks have risen considerably. Does the Fed want to see stock markets fall? Maybe just a bit, not to crash. That was an interesting comment. As you know, there's a correlation between dollar-yen and stocks. Not as strong as it used to be, but if stocks fall, dollar-yen could also not go as fast as beforehand. Okay? In general, we had optimism, and this optimism helps the US dollar. The next big events to watch out for in dollar-yen. We have jobless claims on, today, Thursday, 12:30 GMT. Then we have the some second-tier figures, I would say, not so important, but if they all go in the same direction, if they're all positive, beating expectations, it could be good for the dollar. If they all miss, it's bad for the dollar. So it's the New York and Philly Fed manufacturing indices, industrial output also later on at 1:15. And tomorrow we have some housing data, housing starts and building permits. In many cases, one figure is above expectations, one is below, and nothing happens. But if they go in the same direction, we should have an impact. Last but not least, we have consumer confidence, consumer sentiment at 2 GMT. It's the last event, it has the final word. So even if it's not that important, because it's the last event, it should have a bigger impact on Friday. Okay, in general, dollar-yen. When I talk about the dollar, why do I talk about dollar-yen? Because it's the most sensitive to US indicators, US politics. Anything, it rises with the chances of a rate hike. We've seen that recovery with the Fed. It falls when Trump is in trouble. We've seen that a few hours ago. And it responds to geopolitical worries. At the moment, we don't have anything, but geopolitical issues can always come out of the blue. Now let's look at the chart describing some levels, technical levels to watch on dollar-yen. What I've pointed out here is, apart from the levels, you can see a downtrend, but this is a triangle, a wedge, which is narrowing down. When we have this kind of narrowing, we can expect technically to see some kind of an explosion, okay, some kind of a bigger move, and let's see if that happens. In any case, the trend at the moment remains to the downside despite this recovery. So the big levels to watch out for: 114.30, the cycle high, then 112.10, so there's a big gap there. This was a high seen a few weeks ago. It's followed by 110.80, and then it gets a bit more crowded, 110.20. Okay, then it's followed by 109.10. We had a breach under that line yesterday, but we didn't go too far, so I would still watch out for 109.10, and then 108.80, which was the low yesterday, and also goes along with the trend line, downtrend support, and the last line is 108.10, which was the cycle low. Okay, so quite an interesting things going on in dollar-yen. Let's continue to the world's most popular currency pair, euro-dollar. We had some figures there. We had a miss on the business sentiment in Germany. We had German inflation confirmed as a drop as expected, so nothing big there. On the other hand, we had something bullish for the euro coming from Jens Weidmann, a German member of the ECB. He wants to taper QE. He wants less euro printing. And politics look stable in Germany and France. In France, we have the second round of the parliamentary elections, the fourth and the last round of elections, and the president, Emmanuel Macron, is expected to win a very big majority. In Germany, polls look stable. So all in all, things are a-okay for European politics. All in all, euro-dollar looks very balanced. We've seen yesterday euro-dollar jump to new highs, almost 113, with the drop in US inflation, and then drop all the way down under 112 with the Fed decision. Now we're a bit more stable, but all in all, we did a full U-turn. In case of dollar-yen fell a lot, recovered a bit less, okay, because of Trump. Next big euro moves. Today we have Eurogroup meetings. Finance ministers in the Eurozone meet to talk about Greece. So there's lots of noise around that. Don't expect anything. It's usually just they make a decision to make a decision next time. I think the German elections in September are critical. We won't have anything big on that until September, but the Greek crisis always has twists and turns like US politics, so just watch out for that. Tomorrow, Friday, we have the final inflation numbers. No big changes are expected, but watch out for that. And, well, the last round of the French elections on Sunday, it'll probably confirm a big majority for Macron, and that will allow him to enact reforms, and that should be euro positive. Okay, in general, the trend still remains to the upside, even though we're currently experiencing more range trading in euro dollar. Growth is stronger in the Eurozone than in the US. Politics look more stable, and monetary policy is moving slowly to the right direction, acknowledging the improvement in the economy. Okay, so we're seeing an uptrend since the beginning of the year. Now let's look at the charts. Again, we're using the MT4 platform. Here, as you can see, we have an uptrend. We have a weakened gap here at the end of April, but now we have some range trading. Okay, so the big levels to watch on euro dollar are 114.20. That's if we break 113, that's the November high. Above that 113.60. Again, if we break 113, of course 113 critical level. Below we have 111.60, which worked as support recently. Under that we have 110.75, which you can see here as a swing low, and 110.25, and then 109.60, which was an initial high. Remember that the 110 level is important psychologically, but it isn't that important technically, okay? And the last line at the bottom is 108.20. Okay, let's continue with the pound. Again, politics is dominating. A deal between the Conservative Party, that is the biggest party in parliament but does not have a majority, and a small coalition partner, the DUP from Northern Ireland. It's still in the works. There's no clear deal. However, things are looking better because according to reports, the Chancellor of the Exchequer, the Finance Minister Hammond, is expected to propose a pro-growth budget, and perhaps what markets really hope for is a softer Brexit. From Hammond, from Prime Minister Theresa May, there's pressure for a softer Brexit from everyone, from everywhere. From the Labour Party, opposition, from former Conservative Prime Ministers John Major and David Cameron. Also, French President Macron and German Finance Minister Schäuble are talking about an option to still remain in the European Union, what is also called regret, okay, or remain. These hopes helped the pound, so we didn't see the pound collapse, despite the unfavorable election result and despite some not so impressive figures in the UK. So these figures have shown that inflation jumped to 2.9%. That did help the pound, but it is not good news that prices are rising too fast, because wage growth, salaries that people are earning, that has fallen to 2.1. Okay, so that is not good news. Standards of living are just falling. Okay, the next big events, we do have big events coming on. We have retail sales, well, very soon. The big event for today is the Bank of England's decision. No changes expected over there, not now. They have a big dilemma. Either raise interest rates to battle inflation, that will push the pound higher, of course, will make imports cheaper, will push inflation lower, and will help with the standards of living. On the other hand, it could hurt the economy, which is slowing down. So they might leave rates unchanged, which they will probably do today at least, to help the economy. We had one member voting for a rate hike last time, and also the previous one, Forbes. She will probably do that again, given the inflation figures. Okay, another thing to watch out for today, at 8 GMT, on thin liquidity, we have a speech by Governor Mark Carney at Mansion House. 3 years ago, he made a big speech at that event that sent the pound shooting higher, and it was totally unexpected, so let's see if he provides any surprises right now. All in all, pound dollar is back to the lower range, but still struggling. Politics is back after we had a break, internal and external. I still maintain a bearish bias because of the weakening economy and because of uncertainty about Brexit. But if we do have a soft Brexit, that means more trade with the EU, that is good for the pound. Okay, now let's look at the charts on the MT4 platform provided by OctaFX. so we're trading now in a lower range, currently 127.30. Levels to watch from top to bottom: 130.50, the cycle high; 129.25, you can see that line here; 128.40, then which is the top of the current range; 127.75 and 127. That's exactly the narrow range that we're seeing now. 126.15, we almost reached that level earlier this week. 125 and 123.50 if we have a total collapse in the pound. Okay, so let's move to two interesting commodity currencies. In Australia, on Australian news, we had Chinese industrial output at 6.5%. That was good news. China is Australia's #1 trading partner. We had the jobs report from Australia tonight. And good news once again, employment jumped by 42,000, much better than expected. The unemployment rate dropped more than expected to 5.5. It's all good. The Australian figures balance out the strength of the US dollar coming from the Fed. We'll see that soon in the charts. Next week we have the meeting minutes from the recent rate decision by the RBA. We also have Australian house price index, the HPI. So relatively, a more quiet week after this one, a quieter week. All in all, the gradual rise continues. We can see an uptrend in Aussie dollar, and we're seeing some positive data from Australia and from China helping the Australian dollar. Again, unfortunately, moves are a bit more subdued, a bit slower in the Australian dollar, but hopefully this trend can help things improve. Okay, let's look at the Aussie dollar chart here on MT4. Also here, similar to other charts, I've put here some trend lines. So we are seeing higher lows, okay, and that is important, that each time that the pair does fall, it falls to a higher level. That is a bullish sign, okay, the technical charts, and also higher highs. So levels from top to bottom, we're looking at, if we look at the real top, of the cycle high is 77.40, followed by 77, very close up there. Currently, we're battling 76.10, okay, so it's a hard level to crack. It worked both as support and as resistance. Further below, we have 75.60, and we're not far from there. 75.15, below that 74.10, and 73.75, okay. All in all, ranges are a bit limited in Aussie dollar, but the trend, I think, is becoming quite clear that after the downfall, we're seeing now a change of course, a change of trend. We're moving to the upside. Okay. And last but not least, the Canadian dollar. At the beginning of the week, we had Senior Deputy Governor Wilkins talking about that interest rates have been too low for a long time. That helped the Canadian dollar. That means dollar CAD fell a lot. Then the governor on Tuesday stepped in as well, saying also some hawkish words. So the Canadian dollar extended its gains. Oil inventories, they weren't that good yesterday, but what we're seeing in recent days is that the Bank of Canada, central banks, have a stronger impact than oil prices. And it still limits the gains of this Canadian dollar, but not as much as before. Next big Canadian events, next week on Tuesday we have wholesale sales, but the bigger events are retail sales on Thursday. Consumption is important not only in the US but also in Canada. And on Friday, the inflation data. That's what moves the Bank of Canada the most. If inflation is rising, they can begin talking even more actively about raising rates. Okay, all in all, dollar CAD had a bad start to the year, but things are certainly improving. That means dollar CAD was on the move to the upside, but now it's falling because OPEC decided to cut production, and the Bank of Canada is more optimistic. Still looking for a direction, but let's look at the charts and show you things on the charts here. So we had a big fall. We even dropped to lower levels yesterday when we had weak data from the US. But I see this as a false break. Okay, not a real break. Always have to confirm a break. In many cases we have these fake outs on the charts. Okay, in any case, the levels to watch are the top of the tops is 137.90. then it's followed by 136.40, 135.40, 133.80 is a very, very clear level of support. Once it was broken, that break was certainly confirmed and we didn't look back. Below we have 132.60 and 132.20. I see the move under 132.20 as a false break. If we do fall below 132.20 in a convincing manner, then 130 is the next level to watch. Okay, so that's it for today. Thank you very much, everybody, for coming. Comments and feedback are always welcome. I wish everybody a safe and successful day in markets. Apart from all the events we described, we'll have further reactions to the Fed and perhaps further political developments in the US. So I would focus on that. And that's it. See you next time, Tuesday next week. Wish everybody also a great weekend and safe trading in markets. So that's it. Thank you and bye-bye.